Gtrend Futures 1, Hedging Protection. In this short overview, we will discuss the settings and how this strategy functions systematically. Hedging protection neutralizes drawdown risk, but how does it recover from sudden drops? Take a primary $50 long position, suddenly trapped by aggressively dropping bearish candlesticks. When an adverse momentum shift occurs, the system executes a counterbalancing $100 short position directly into the trend. The $50 long is left trapped right where it is, bleeding paper losses as the bearish candles continue downward. When the market continues dropping, the system executes continuous dual-sided equity monitoring. The heavier short's positive P&L rapidly outpaces and absorbs the decaying long's loss. When combined net equity crosses into positive territory and hits the hedge gain threshold, the system executes an automated, synchronized cross-close to liquidate both positions simultaneously. The account walks away with preserved capital and net profit without ever realizing a cash stop-loss. And that trapped $50 long? The synchronized dual-sided basket absorbed it for net profit.
When a crypto trend suddenly collapses, manual traders get trapped and liquidated. But the Gtrend algorithmic architecture escapes market crashes without taking a loss. Say you place a standard buy order on a rising green candle. If the trend continues upward, the algorithm aggressively stacks your position to maximize profit. But what happens if the price suddenly plummets? Before the drop destroys your account, the system hits a mathematical risk boundary. It instantly locks your original trade and fires an equal-sized short order. This completely freezes your floating loss, no matter how far the price falls. Now, the engine groups both opposing trades into a single basket. It waits for the short position's profit to perfectly cancel out the original trade's loss. Once they balance out, it triggers an automated, no-loss cross-close. The entire basket liquidates at net zero, clearing the board to reset. So while everyone else panics over a sudden crash, your account stays perfectly protected. You can automate this exact defensive safety net for yourself by getting Gtrend strategies today.
Hedging protection. In this video overview, we will discuss the settings and how this trading strategy functions systematically. This is a futures leverage trading strategy that utilizes a multi-layered dollar-cost averaging entry grid and a dynamic cross-hedging protection mechanism. The architecture explicitly abandons static fixed stop losses that realize immediate localized losses. Instead, it utilizes mathematical counterpositions to completely freeze paper losses when the primary position enters a drawdown against the macro trend. By dynamically locking the paper drawdown rather than exiting immediately, the strategy keeps trading capital actively working inside the market architecture. This diagram illustrates a unified risk basket where opposing long and short positions are mathematically integrated into a single entity. As shown by the tracking metric, the algorithm evaluates profitability exclusively on the combined net unrealized P&L of both sides working together. The hedge and primary positions are managed as a combined basket to execute an exit only when the trend structurally realigns on the 10,080-minute one-side heading period timeframe. When the primary position goes into drawdown against the macro trend, the system executes a counterposition to neutralize risk and lock paper losses. This framework operates through 4 precise phases of structural containment. Phase 1, solo mode. Phase 2, core hedging. Phase 3, micro hedging. And Phase 4, risk lockdown. Forcing market volatility to resolve mathematically entirely eliminates emotional stop-loss anxiety. Phase 1 is solo mode. It begins with the both sides initial TL parameter deploying an 8 USDT baseline probe order. This initial order establishes a directional bias in the market while leaving maximum capital available for potential defensive scaling later. Candle divide levels slices a 7-day chart candlestick horizontally into 5 execution zones. Inside these zones, fast-moving 1-minute chart candlesticks track local price action. When price crosses a zone, the system executes a progressive DCA order, scaled by solo TL molt, to aggressively average the entry price. The solo TL molt parameter functions as a 1.8 times compounding multiplier applied exclusively to consecutive solo orders. This aggressive multiplication intentionally shrinks the mathematical distance between the average entry point and the break-even point. Deploying aggressive compounding during Phase 1 maximizes the probability of a fast single-sided profit exit before the defensive systems are ever required. The solo max pose setting at 50 USDT acts as the strict mathematical boundary where Phase 1 compounding terminates. Crossing this 50 USDT threshold forces the bot to lock all new single-sided entries and await a structural trend flip, When solo exposure reaches 50 USDT and a macro reversal candlestick prints, the system executes a core hedge counterposition to freeze floating losses. This relies on hedging protection set to true, permanently merging the trapped long orders and the new short orders into a unified risk basket. During Phase 2, the system utilizes trading limit mult to calculate defensive volume. When counterposition orders are required, the system executes a volume calculation using trading limit mult of 1.8 times against total live accumulated exposure. This heavy 1.8 times multiplication on the entire basket is mathematically required to aggressively drag the combined break-even point toward live price action. Phase 2 transforms an isolated losing position into a balanced equation, using the market's own adverse momentum to force a break-even approach. The My Max Position setting establishes 200 USDT as the critical capital exposure threshold where heavy scaling becomes a danger to equity. Once accumulated basket volume crosses 200 USDT, the aggressive 1.8 times multiplier is permanently deactivated. When accumulated basket exposure crosses 200 USDT, the system executes deactivation of the multiplier and activates max position micro hedge % to inject fractional counterorders. As shown, it uses a fixed 20% factor based on total exposure rather than aggressive compounding. This phase also shifts analysis to a daily 1440-minute structural trendline constraint to calculate these smaller injection zones. This fractional compression ensures the account can continue absorbing market volatility for extended periods without risking severe overleverage. The reversals max pose setting at 400 USDT forms the absolute maximum containment wall. When total exposure hits 400 USDT, the system executes an ironclad margin freeze, locking all DCA and hedging mechanics to neutralize margin call risks. In this locked state, no new margin is committed under any circumstances, entirely isolating the risk. The system now enters a state of pure macro patience, waiting for a verified reversal on the 7-day one-side hedging period chart candlestick. Once the macro 7-day trend shifts, the system selectively clears the short position at a micro profit and rides the new trend to clear the long position. Establishing an absolute mathematical ceiling guarantees the account is never liquidated by a sudden, prolonged market dump. Fast-forwarding to the resolution of the trapped position basket, the active market movement causes the winning leg to outpace the losing leg. This graph illustrates the hedge gain parameter set to 1. Hitting 1% does not trigger an instant exit. Instead, it arms the stop-take-profit period logic. The daily stop-take-profit period timeframe must validate a chart candlestick reversal structure to confirm momentum is fully exhausted. When the combined net unrealized P&L crosses the hedge gain threshold and stop-take-profit period validates a reversal chart candlestick structure, the system executes a synchronized cross-close, liquidating all primary and hedged orders at a net profit. By trailing the unified profit rather than taking an immediate flat exit, the system maximizes recovery value and clears heavily drawn down grids at a true mathematical net gain. The entire framework functions by constantly shifting control from fast 1-minute execution intervals to patient 7-day macro verification requirements. Mathematical drawdown management provides unmatched capital velocity compared to accepting direct stop-loss hits.
When a traditional static stop-loss is triggered, the system executes an immediate realized capital loss. When the Gtrend cross-hedge detects a drawdown, the system executes the deployment of an integrated dual-sided basket to neutralize risk mathematically. The architecture operates as a strict 4-phase state machine, moving from aggressive directional compounding into tiered defensive hedging. Transitioning strictly based on mathematical exposure thresholds entirely eliminates emotion-driven manual liquidation events. Phase 1, Solo Mode, starts with a baseline initial trading limit of exactly 8 USDT to test market liquidity. This chart displays a weekly candle split into 5 localized checkpoints. This geometric granularity dictates spacing for the Phase 1 entry engine. When live price moves through a checkpoint, the system executes a progressive DCA entry multiplied by 1.8x based on accumulated position. The isolated solo position requires an initial take-profit target of 1%. When the solo position's profit crosses the 1% threshold, the system executes a trailing routine, waiting for a confirmed chart candlestick reversal on the 1-minute chart before closing. Utilizing the 1-minute timeframe allows for instantaneous, near real-time execution while trailing. heavily compounding order sizes rapidly pulls the average entry price closer to the current market price to force a faster localized exit. The mathematical boundary for Phase 1 exposure is strictly set at an accumulation ceiling of 50 USDT. When total solo side exposure reaches 50 USDT and a weekly candlestick breaks the primary trend occurs, the system executes a cessation of solo orders and activates Phase 2 core hedging. This UI illustrates the dual-sided basket. When the primary position goes into drawdown against the macro trend occurs, the system executes the opening of a counter position to neutralize risk and lock paper losses. The primary and counter positions are now permanently linked and managed together as a combined basket. All defensive hedge orders must pass a strict directional filter to guarantee alignment with the dominant weekly trend. A 1440-minute daily look-back timeframe is required to confirm structural support before committing any defensive capital. When a recovery layer is required occurs, the system executes a new counter position scaled by exactly 1.8x against the total live accumulated exposure. This specific scaling factor applies exclusively to the hedge side of the book.
A constant heavy scaling multiplier is mathematically required to dramatically pull the blended break-even point close to live market action. The next critical exposure threshold separates aggressive hedging from fractional compression. This gauge shows the system reaching the capital exposure threshold. When total accumulated basket exposure crosses 200 USDT occurs, the system executes the permanent deactivation of the 1.8x multiplier and pivots to fractional micro-hedging. When further structural scaling is required occurs, the system executes an order adding exactly 20. By capping order sizes at 20% of current exposure, the system slows the rate of margin growth, providing the necessary room to sustain an adverse trend without breaching total equity limits. The system builds an ultimate structural containment wall, acting as the absolute capital circuit breaker. This diagram shows the system reaching its absolute limit. When total combined exposure hits 400 USDT, occurs the system executes a complete margin freeze, locking all buying, hedging, and DCA functions on both sides simultaneously. This forces the system into Phase 4, emergency risk lockdown, a state of pure structural patience. When the market continues to dump against the position occurs, the system executes a strict hold, keeping both long and short positions locked to completely isolate the risk. The algorithm waits for the weekly chart to confirm a macro reversal. When the weekly chart prints a structural trend shift via a bullish reversal candlestick occurs, the system executes a structural exit calculation, targeting a net break-even state. The initial exit step closes the short position at a small profit as the price bounces back upward. The remaining long position rides the newly established upward weekly trend until price climbs above its respective break-even point. This capital lockdown prevents any additional margin commitment, which eliminates the risk of an exchange margin call, regardless of market swings. Returning to the overarching profit mechanism for Phase 2 and 3 trapped positions, the primary tracking metric compares the positive unrealized P&L of the heavy counter position against the negative floating loss of the trapped primary position. The combined net zero point occurs at the exact moment the positive P&L completely absorbs the negative loss. This gauge measures combined basket P&L. When combined unrealized P&L of the dual-sided basket exceeds a 1% profit past the break-even point occurs, the system executes the arming of the conditional trailing exit. When a confirmed reversal candlestick prints on the daily chart occurs, the system executes an automated, synchronized double market close to liquidate all orders simultaneously. This synchronized exit guarantees the hedge system never closes at a mere break-even, instead extracting verified profit from adverse swings. When the final target is successfully hit and liquidated occurs, the system executes a total wipe of the grid, resetting memory parameters to 0 and immediately returning to Phase 1. Tracking the blended net balance allows the algorithm to use adverse price movement to generate profit on the hedge side, resolving the cycle without taking a direct stop-loss hit. Buy Gtrend strategies and visit the links to view live trading on the demos.